that sort of leads to the monetary premium idea that I was talking about earlier, because this is not a concept in mainstream economics that people talk
Yeah.
about very much. Certain things having value, above utility. So perhaps just talk to that particular point, when people are talking about something having a monetary premium. What does that actually mean? And I guess, how does that relate to Bitcoin?
Yeah. Well, if we go back to the Cantillon Effect example, when you kind of think of money being introduced into an economy, new units of money, and if you are someone trying to take advantage of the market, where would you inject that new money to get the most benefit for yourself? And what you would do, because money itself, fiat money, fails to hold its value over time by design, you're going to put it into things that preserve your value the best you can with the
Mm.
choices you have available to you. Housing has previously, and I used to live in Australia, now I live in Canada. So I say previously because for a lot of people, it's become just not a possibility. Housing was something that was available to the most number of people because the most number of people had access to mortgages. So many people, like you said, would use housing or real estate as their savings account because if they had saved in fiat, housing just kept getting further and further away from them. So anything that continues to get further and further away from you relative to your monetary unit is likely accruing a monetary premium. And that is people are using it as a store of value because the money itself is broken and not doing its job. So, you can look around. It could be fancy watches, bottles of wine. You look at the art world. So things that appreciate in value disproportionately when new units of money are introduced into an economy. Usually that's a sign that they are attracting a monetary premium. And, the hope with Bitcoin is that Bitcoin is such a superior money because it is purely monetary premium. It doesn't really have, it's useful, but you kind of think of it as drinking the milkshake or sucking that monetary premium out of other assets just because Bitcoin's a preferable place to store value. Whether it's to do with its transferability, censorship resistance, maybe it's more liquid. So yeah, be careful what you save in is really the lesson.
Yeah. Yeah. And I don't know if this is something you mentioned in the book or something I read recently too, where once we've crossed over like a threshold where something is like widely recognized as being a better technology, there's no one's going backwards. So like it wasn't as if like
Yeah,
we got the car and then some people were like, well, let's just hop on horses sometimes. Like it just didn't happen that way. Like once we found something much
yeah,
better. So you wonder like at what point Bitcoin crosses that threshold, and starts materially draining capital from the $900 trillion global asset market, particularly when you think that there's a lot of negative yielding bonds, well, in real terms, I
mm,
guess. You
mm,
think to yourself, I'm struggling to see the value proposition of holding government debt that's lower than that gives me a coupon rate lower than inflation rate. I mean, it's like a return free risk, as it were.
yes,
I
yeah,
think as Greg
yeah.
Foster said, you know what I mean?
Well, and you've hit the nail on the head in terms of the process that a lot of Bitcoin maximalists have gone through, and that is it's not ideological; it's just a process of elimination. You know, they've gone through real estate, they've gone through bonds, they've looked at every other potential, I guess, investment or savings vehicle, whatever you want to call it, and they've looked at the opportunity cost, and Bitcoin has just been the best choice from an engineering perspective. So with the least risk.
Mm.
So yeah, it's unfortunate that people's time has to be spent doing that activity because in an ideal world or under a sound money standard, money just performs that task.
Exactly.
Um,
Yeah, it's funny because I had a long chat with my uncle recently who was down, and he was saying, okay, maybe I'll get on board, Bitcoin, but why why does it have to be such a big percentage? Do you know what I mean? Like, what's wrong with stocks? And even my father-in-law is like, I, you know, don't you think that the average person should just be putting the money in the S&P 500? And I think my response was along the lines of like, yeah, if you don't know what Bitcoin is, I don't think you should be investing much in it because you're going to have a heart attack when it goes through its
Mm,
inevitable
hmm.
declines, because it's
Yeah.
horrible. If you're not equipped to be able to handle the volatility, you'll be shaken out and you'll probably be scared to get back in the water. And that's why people are going study Bitcoin, not just buy
Yeah.
Bitcoin, because it's not really that constructive in the bigger picture.
Yes. Yes.
When we're talking about that monetary premium being drained from all these other things that perhaps don't have as much utility, whose value proposition isn't as compelling, it's not as scarce, all those types of things. And let's imagine there's 900 trillion today, maybe it's more, maybe it's less. What do you like if you were to put a number on it? Like, how big do you think Bitcoin's total addressable market could be? I mean, I
Yeah.
throw out 100, Anil, because I just like the number, but I don't know if that's got any validity in
Yeah.
reality.
Yeah. I don't have a clue, but what I do know, and a really helpful exercise to go through, is think about all the different pies out there. The line I like to use is Bitcoin takes many slices from many different pies. So you could just look at the products and services that are out there now. So, think of the credit card fold, basically, earning rewards in Bitcoin. So that's a huge business in itself, credit card rewards points. At a certain point, any reasonable person will prefer to have Bitcoin than some loyalty point or air mile or whatever. At some point, it becomes too compelling not to do that. And you think about life insurance. Okay, do you want a life insurance policy that pays you a fixed fiat amount 40 years from now? Or do you want one that pays you a fixed Bitcoin amount 40 years from now? Which do you think is going to preserve your purchasing power better, or take care of your family better should you pass away? And there's just all these really interesting use cases that Bitcoin is only just starting to penetrate. And, you kind of think of the road or journey that Amazon has been on, and you look at, what, 15, 18 years down the road, AWS just becomes this massive beast in terms of the revenue it provides to Amazon company. So I just think many of the use cases, or the dominant use cases of Bitcoin, are yet to be fully understood or even realized. So I think Bitcoin will just penetrate all these different markets in very interesting ways, and it'll be very difficult to predict what's kind of going to really pour fuel on the fire. So
That's why I wanted you to come on the show, Neil, because you're measured and sensible. Because I veer on the side of
yeah,
hyperbolic from time to time. Because yeah, I mean, I did not even think about the fold side of things. Like, who wants your petty airline miles? Do you know what I mean? And absolutely, I knew there was something with insurance and Bitcoin, because I always thought, like, I mean, even if these insurance funds decided to put like 0.5% or 1% of their assets into Bitcoin, what that could actually do to their ability to be able
mm,
to, make payouts and whatever it might be in the future. I mean,
yeah,
there's just so many things, as you say, that are just unknown. Um, I often talk to people as well, like, about, look at all these intermediaries involved in making payments. Like, when to go watch the fights on the weekend, and because labor's so expensive, you got to scan a QR code, then you got to have some stupid app that just is another bloody middleman, and you got to, like, oh,
yeah,
who are you? Oh, you want all my information? Okay, put in some nonsense name, and then they clip the ticket. Visa's clipping the ticket, like,
yeah.
and then the bank's involved. There's probably like 4 parties in this transaction. It's like, are you joking? This could easily be done via Lightning. We don't need this nonsense. So, yeah, I maybe I should actually be more measured. I think I'll take that out of this conversation. Hey,
No, but you need the balance, right? You need the
yeah,
balance.
yeah,
Uh,
absolutely. Maybe like if sort of Max Kaiser and you sort of had a baby, then that'd be the perfect Bitcoiner.
yeah.
Oh,
Uh,
okay. All right. Ladies and gentlemen, very pleased to introduce my next guest, Mr. Anil Patel. Welcome to the show.
Thanks for having me, Dale. Really excited to cover some ground.
Yes, absolutely. And you know what, Anil, I've been looking forward to this conversation for a little while, just before I went on my trip to the bush in South Africa, we were in touch with each other, and got an opportunity to read through your book, which one of the fellas here in Australia had gifted me after an interview with him, The Wizard of Oz. So shout out to The Wizard of Oz. Really
A
enjoyed the book.
very,
Do
yeah,
you know
yeah,
do you
no,
know The
Wiz,
Wiz?
he's a very wise and generous man. Yeah, I'm a big fan. Very,
Indeed.
very lovely guy.
Super. Okay, indeed. I agree wholeheartedly. And so, yeah, in addition to your conversation with Preston Pish, which I found really interesting, I thought perhaps I can try and introduce a different angle because Preston's the man at what he does. And I think he touched on a lot of those sort of heuristics, those psychological heuristics. And perhaps what we can do today, Anil, in terms of the ground I'm looking to cover is, let's call it happenings of the day. What's happening in the world of Bitcoin today as we speak, and then we can sort of layer in some of the concepts you talk about in your book, the Bitcoin Handbook, which for anyone listening or watching, highly recommended. It's particularly interesting for those who are just beginning their journey, because it's very clear that you've drawn from essentially the heavy hitters in Bitcoin, from the Lynn Aldens to the VJ Boyapatis of the world. And I really love the way you tied it all together. So I guess just out the blocks, if you wouldn't mind, for those of you, for those who don't necessarily know who you are, wouldn't you just give us like a little bit of a background and how you found your way into the wonderful world of Bitcoin?
Yeah, I'm no one special, very much just a pleb that maybe has a bit of a head start in terms of time on a number of Bitcoiners just because of the city that I moved to in Canada happened to have a very well established Bitcoin scene, I guess, when I got here. So, I made the mistake many people do, and that was mistaking Bitcoin as purely a payments technology. And it is, but it's much more than that, as we all know. But at the time, I'd been moving around the world. I'd made a couple of major moves, and that involved also having to move assets. And you know what a joy it is moving money across borders. And it was just a very frustrating, slow, and expensive experience. So when someone tells you that there is now a technology that enables you to send money as easy as email, it's permissionless, it's borderless, the actual technology doesn't reside in any one jurisdiction, it sounded really appealing. So, I didn't grok Bitcoin from day one, but I definitely found that part of it very interesting. And luckily enough, over time I had very smart people guide me in a productive direction. Because a lot of people hear about Bitcoin and then get dragged in different directions or believe they found something superior, and it takes them a while to kind of course correct. So it's definitely not me. I was just very lucky to be in the right place at the right time and had much smarter people around me acting as the bumper bars on the bowling alley, if you will.
Yes. It's well, one of the things I think when I think of you, and you were sort of, it just epitomizes in the way that you kind of responded there, was the humility, because within this space we've got people ranging from the bombastic and hyperbolic to sort of the understated, very sort of softly spoken but articulate folks. And I think you fall into that latter category, and I think you don't give yourself necessarily enough credit there, Neil, because the way this book is written there, man, it's exceptional. It's like, it's very clear you've done all your work. And something else you said that just resonated with me, like in a massive way, was I was very blessed, perhaps like you, not to get sort of veered off by all the sort of crypto shiny lights, because I had all these incredibly smart people who did a ton of work before me. So all I had to do was look at the Parker Lewis's and VJ Boyapatis and the Lynn Aldens, and I was like, okay, I think I understand this thing, and yeah, that other stuff's noise. So that's fascinating.
Yeah,
Perhaps,
but that's a good Dale. That you
yes,
got to give yourself credit there, right? Because it takes a huge amount of discipline to do the work, to like read what sometimes could be considered dry and boring versus all the hyperbolic stuff that
yes,
gets put out there.
yes.
Yeah, so yeah, pat yourself on the back there.
Well, thank you. Yes, and I also say that I had the gift of time. Not everybody does. I happened to be at a point in my life where there was just, I had ample opportunity, and that was the most beautiful thing, because I truthfully don't think I would have found Bitcoin, or at least had that conviction that I do. I might have allocated a tiny portion, but certainly not the extent that I have today. And it's just because I had time. and many people don't have time. And that's the difficult thing with Bitcoin, isn't it? When you've got this incredibly complex asset that sort of touches on so many things, from
Yeah.
energy and game theory, psychology, economics, all these different things, technology. It's tricky and it takes time. And obviously you put in the time, I put in the time, and in my case, I just happen to have the time, fortunately.
Yeah. Yeah. It's a
Yeah.
very fortunate to be at a point in life where you do have the time, because so I make a lot of infographics and illustrations. That's how I kind of thought I would contribute to the Bitcoin educational canon.
Yeah.
Is I recognized meetups are a huge part of how Bitcoin gets adopted or communicated, and people giving speeches or presentations don't always have the resources. So I was just putting online the resources I was making for my own talks, and other people were finding that useful. Anyway, long story short, one of them that I made was basically just about 30, maybe 40 different traps people commonly fall into with Bitcoin in terms of how they misidentify it or believe something that is just provably wrong about Bitcoin. And I think a lot of people get tripped up on thinking Bitcoin is only for very intelligent people, when I think Bitcoin's really just for very humble people. Because if you're willing to sit there and go down each of those roads and basically cross them off, you know, the list of potential ways Bitcoin could fail or false narratives you might have heard, well, then it's just a process of elimination, you know.
Absolutely.
Um, yeah,
Yes, and one of the I guess one of the things you kind of speak about in the book was the sort of the category error. And I've encountered this, endlessly over the last little while talking to normies on holiday. And they just seem to think that Bitcoin is some sort of, tech stock. It's just another one of those. There's nothing particularly unique or special about it. But, the reality, as we know, is that it's just an entirely different beast unto its own. And that's just one of a plethora of, what was the term there? Sorry, I can't think of it right now. Heuristics or,
yeah, mental models
there
or
we go.
yeah,
Yeah, something like that,
yeah,
errors that people make when trying to assess Bitcoin. I guess before we go down that path, because I've got a couple specific ones that I found really interesting, let's talk about perhaps some of the more topical things of the day, because I guess since you've written the book, we've now got an ETF. And when I look at, 11 ETFs to be more accurate, and when I look at sort of now, I guess the new cohort of investors going forward, it looks like these are going to be the kinds of people that don't care that much about censorship resistance. They don't care about all the other qualities that Bitcoin has. They just care about number go up. So I'd love to get your thoughts. I haven't heard you speak publicly about your thoughts on the ETFs and what that actually means for the network going forward.
yeah. That's a good question. Haven't been asked it before. I would have to default to people smarter than me. I just don't fully. I'm not an expert on the mechanics of all the different kinds of ETFs out there and how they vary in terms of fees or structure or custodians. But at the end of the day, all I care about is, can I protect my own purchasing power by holding a non-dilutive asset that, even if there are ETFs or other financial products out there, it doesn't affect my purchasing power or me saving in that vehicle, if that makes sense. That there can
Yes.
be ETFs, but can they change the rules of the protocol? Well, not according to the software I run on my node. So I'm not really sure what impact it'll have. Certainly, it is great for now having the marketing machine of all these giant financial institutions kind of on side of, they're going to push Bitcoin as something that is useful in protecting purchasing power over time. And hopefully, people, even if they are customers of ETF products, over time choose to and have the opportunity to self custody in the future. So I honestly have no idea what it's going to do. It clearly unlocks a huge amount of capital that previously just couldn't access Bitcoin in a self custodial way. It just isn't in the mandate of a hedge fund to
Mm,
do that. But I think overall it's a positive thing in terms of education.
yeah. The interesting thing as you're describing that is, yeah, the marketing piece. It just is a sort of, when you've got Larry Fink and the likes, and I wouldn't necessarily take what he says at face value, but when you've got Larry Fink saying it's a flight to quality, or when you've got BlackRock, Fidelity, and all these institutions effectively endorsing Bitcoin by having a product, so that's almost what you would call positive marketing. And then you'd have all these instances of where you'd say, oh, it's doing this, it's doing that, all this negative press that only serves to reinforce the value proposition of Bitcoin in the first place, which goes to something that you mentioned in the book, anti-fragility. The more and more FUD and nonsense they chuck at Bitcoin, the more robust it becomes, because it actually just proves the actual value proposition in the first place. I wonder, though, from my perspective, whether or not the ETFs over time will undermine one of the value propositions, which is like holding your own money. And if they swallow enough capital and the rules are such that you aren't able to take self-custody, does that threaten something that was really important, at least to all the early adopters? And that's just one of the things that I've kind of mulling over. But of course, the marketing, the number go up is pleasant.
Yeah. And I mean, fortunately, in market dynamics, the more they bid into the price, Bitcoin's a very liquid asset. But for the amount of demand that currently is being bid into Bitcoin, it's fairly illiquid in that people who have held through multiple cycles are very unwilling to realize a profit at this point in time. I mean, it's gotten to a point where I feel like I know enough Bitcoiners who can now see the road clear enough ahead and are also building products to get there, that they almost view Bitcoin as, say, commercial real estate, in that they believe it will have a period of being so pristine as collateral that they'll never have to sell it. They will never pay tax on it. They will simply borrow depreciating fiat against it for as long as fiat continues to exist. So once that strategy becomes more obvious, and once enough products exist to serve that purpose, why would someone sell their Bitcoin?
Yes.
A lot can happen before that, but yeah, I kind of see that as the end game.
I think that's something that we talk about a lot. One of the chaps I talk to fairly often here in Australia, Sir William of Rotherham, you might have encountered him on Twitter. There's sort of two approaches to this. The one is to say, build up your stack to a sufficient point, and obviously this can't really happen if you've got sort of a really baby stack, but if you've got a pretty sizable stack, there will be a point of you being able to go, look, I can map out my expenditure for the next 4 years, sell that amount of Bitcoin, stick that in an interest-bearing account. Yes, it's melting fiat, blah, 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 right? But 4 years from now, 5 years from now, it's pretty likely that we'll see potentially a double, your Bitcoin capital position, if you like, will have doubled. And so many people are also talking here about this idea of, well, being able to live off your Bitcoin forever. Sure, there's going to be capital gains events and all that jazz along the way, but that's one approach. And then there's the other approach that you describe, which for me is more appealing because you get to keep your corn. But yeah, and then you're not sort of incurring necessarily a capital gains tax event. But I just wonder when those products are going to be ready for mainstream. I mean, if you have you got any sort of sense, if you were to try and, I know it's a hard thing to say, but have you got an idea of how soon this could be?
Again, yeah, I don't have any secret information. I do know of a company testing out something along these lines in the US. So who knows if they get the approvals they need, that goes live. That'll be an interesting experiment to witness. But something else I think that's worth mentioning is, stacking Bitcoin is great if you have the excess savings to do so. But I think we also missed the picture, or sorry, the other sort of half of the equation that is, I guess it usually caters to younger people, but it could apply to many more, is if you don't have excess savings, even if you are in fiat debt, and just the prospect of even stacking any amount of Bitcoin is just infeasible or seems impossible right now, at least educating yourself about Bitcoin gives you a huge advantage relative to everyone else, because you're then going to be incentivized to develop very specialized or in-demand skills, and you'll also have the willingness to accept payment in Bitcoin, which is also the other really important thing. So, you don't necessarily need to accrue wealth by simply accumulating Bitcoin now, as long as you're going to be a useful value creator in the future, which I don't think everyone wants to do. In a fiat society, a lot of people are very disheartened, disillusioned, demotivated. If you're able to still be very motivated and highly productive because your intention is to stack Bitcoin or be compensated in Bitcoin, I think that's going to be a very interesting angle. So I hope people don't lose hope thinking, they've missed the boat because they just don't have the fiat to buy Bitcoin with today.
Absolutely. That's actually a great point. And yeah, having just come back from South Africa, I mean, it's unfortunately all too real, the reality that the average person's just not in a position to be able to stack. I guess the real question would be is what's going to incentivize them to put in the 100 hours, let's say, if that's what Saylor suggests, at the
Yeah.
right level, because I think to an extent one needs to be quite financially literate or, relatively well read across a number of different areas, perhaps. Maybe you disagree, but
Yeah.
yeah, what do you think would drive that incentive, I think, to get people to care enough?
Yeah, I guess it just comes down to money. Everyone wants to save in the hardest money. I have family in India and would visit there when I was a kid, and gold is very coveted in India. Very low levels of financial literacy, very low levels of just literacy in general. This is when I was a kid. Obviously, things have changed now,
Mm,
but everyone understood the implicit value of gold, mainly because it was outside of government debasement potential. And also it was usually worn as jewelry because it was like on your person, you were custodying it at the same time. So yeah, I think I would disagree. I think the incentive is, what's going to protect your value over time. If you're earning in pieces of paper and the cost of food keeps going up and up when everything else has not changed, yeah, you're going to be asking questions. Are there alternatives?
mm.
So I think Bitcoin's price is its marketing department in a way, because yeah, it just forces you to ask those questions. Why is that going up relative to this piece of paper?
Indeed. And hopefully at that point you can wade through all the naysayers as the sort of central bankers and the governments who have an interest, I guess, in not necessarily endorsing Bitcoin per se, because it will expose the fiat Ponzi. you know,
Yeah, yeah,
and why is it necessarily the case that everything gets more expensive? Does it have to get more expensive? I guess that leads neatly to like another question that I was hoping to touch on in this conversation. So you speak in your book about Gresham's law, and then I'd love you to talk about Gresham's law and then how you see that in relation to circular economies. Because having just said what I said in relation to there's a lot of people in South Africa, just where I'm from, who just don't have money to pay the bills, period. And so
yeah,
to have them being exposed to the volatility of Bitcoin in some ways is irresponsible. Dare I say I'd be happier if they were to just adopt Tether in many ways. It would serve their
hmm
daily
yeah,
needs better. Yeah, perhaps talk to us a little bit about circular
sure.
economies and Gresham's law and how you see that all sort of working.
Yeah, I mean, I'm not an expert on Gresham's law, but like my base understanding is, it's in relation to commodity money. So two different commodity monies circulating at the same time.
Mm,
And the direct quote from Gresham, it gets misquoted a lot, but the direct quote is good and bad coin cannot circulate together. And basically, what Gresham's law is concerned with is the face value of money. So if I have a copper coin and a silver coin, and I stamp both those coins, the same weight, same size, same dimensions, and they are stamped with the same face value, and I tell you these are worth the same, the market will very quickly figure out that that's BS, and people will start hoarding the more valuable commodity money. And I think the same thing applies now. If you're in Argentina, people will take your dollars over your pesos. They just will because they know. So when it comes to circular economies, and you see a lot of Bitcoiners creating products and services for other Bitcoiners because they want to accept Bitcoin as payment, it's because they've kind of figured out Gresham's law. They know that Bitcoin circulating with other inferior monies, they only want to accept Bitcoin. Then they're if that's available to them, they will
mm.
prefer to take Bitcoin rather than anything else. So yeah, I mean, hard money does that. It forces its preference on the market. You know, And over time, more and more people accept it. It becomes more and more liquid. It's just this like self-fulfilling prophecy in a way. And yeah, I mean, Gresham's law was written at a time when we were talking about metallic forms of money, gold, silver, copper,
Yeah.
whatever. But I think it does apply to Bitcoin and fiat loosely,
Yeah.
just in terms of thinking it as an A/B test.
Yes. And if there's a way for you to look at fiat, whether it's, US dollars or pesos as your sort of checking account, and then Bitcoin as your savings account, and you have the ability to, let's say, receive Bitcoin, so you're, for your goods and services or whatever you might be doing, and then you can swap those into a better fiat currency that you can then keep for short to medium term savings. That seems like a really good
Yeah,
solution. And it's something I saw recently with Jan 3, Samson Mao's company. They've got a new product called the Aqua Wallet, and it
mm-hmm.
enables these
Mm-hmm.
swaps automatically. And I thought that was really powerful for
Yeah,
Africa and, I guess the developing world all over, because to me, that seems quite valuable. Since I've moved to Australia, and that was only 6 years ago, the South African Rand has depreciated from about 10.90, no, sorry, 9.90 Rand to the dollar to now 12 Rand 57. So it's like a 30%
right. Yeah,
over 6 years.
yep,
It might not be like in Argentina, but if you're in
yeah.
South
It's
Africa,
noticeable.
it's noticeable. Absolutely. And when I go
Yep,
back there, it's not cheap. And I'm
yep,
like, how do people survive? So yeah, that makes sense. One of the other things you talk about, and it's not really related to Gresham law, but it's related to money, is the Cantillon effect. And this is something that I think that Bitcoiners do themselves a disservice by throwing out the term money printing willy-nilly as if they understand all the intricacies. And then when probed, maybe I've done this, frankly. When
yeah,
probed, it's like, okay, it's QE, it's they can,
yeah,
whoever's closest to the money's figured, blah 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 blah.
yeah,
You give an example in the book of sort of
yeah.
how that might relate to, I guess, today's world, and why we might see some disillusionment amongst the population.
Hmm. Hmm.
And just talk to us a little bit about the Cantillon effect and the easiest way that you would explain it to, I use the
Yeah,
term normie as being anyone who doesn't really pay attention to Bitcoin.
yeah, for sure. It's I think the example I used in the book because Richard Cantillon, you kind of wrote it during an era of, again, under not a gold standard, but a bimetallic standard. So gold and silver were used as money. And you can kind of think of, imagine you're running an economy based on silver. All of a sudden, ships return from South America full of boatloads of silver that have just been freshly mined. Well, the people who have that silver, they get to make choices before anyone else has felt the effects of those choices. So they could go and buy all of the scarce assets available to them at the time and sort of inject all that silver into the economy. And what is going to happen when they do that? Let's say they literally double the amount of silver in the economy, and they identify all the scarce resources in that economy, and then that's where they inject or purchase with that silver that they've just mined. Well, it's going to inflate the prices massively, and by the time that's become obvious, everyone else, you just won't see it happening. It's very non-obvious. It's very subtle, but it affects everyone. And so if you kind of think today, a commercial bank has the ability to create money, outside of central banking. So let's just keep a very basic example. Someone going to get a mortgage. And I
Mm.
think Saifedean uses this example in the fiat standard. That bank, let's say the house costs $1 million. Someone's borrowing 500,000, half of it. That bank is then going to create $500,000, which has now increased the money supply. That person is going to use that $500,000 and give it to the seller of the house. The seller of the house can then spend that $500,000 into the economy, and everyone's none the wiser. But that person gets to make choices before the inflationary effects of adding that $500,000 into the economy has happened. So all you kind of have to really think about when you think of the Cantillon effect is who has an unfair advantage in terms of being able to make decisions and direct capital before everyone else understands what's going on. I'm trying to think if there's a simpler way to explain it. But in reality, imagine if you could see that things were very underpriced. No, I won't do that. I'll leave it at that.
You know, a good example of what you're talking about, basically, if I go back to sort of during COVID, and this didn't really happen here, but you had BlackRock buying up multifamily homes, and they were able to get effectively 0% interest rates because they've got so much capital and they've got so many assets under management and blah, 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 blah. You know, the net effect is that every house in, you know, every desirable area just shot through the roof. And yeah, the best example I use is always housing here, because Australians use housing as a savings vehicle, a monetary, it's got a massive monetary premium, which you mentioned in the book. And hopefully Bitcoin can suck some of that away in time. But you know, when you've got a world where interest rates are 1 or 2%, why bother saving? You know, and you've got inflation that's running hot. And if you've got assets, why wouldn't you just go and borrow against it and buy more property? And so we saw property prices rise by like 40% here, or 45% in Brisbane, you know, sort of bottom to top. And I believe Canada's pretty similar. It's got a similar dynamic to Australia as well as New Zealand. You know, the economy or people's wealth is very much tied up in their primary residence. So I sort of I go on and on about real estate quite often here, even though I'm trained in real
Yep.
estate and all that jazz. But to me, it's the most obvious manifestation of the Cantillon Effect, because if you're an asset owner, you just got a whole lot richer, and the poor pleb who was diligently saving for their first property, it's now 40% more expensive, and they had nothing to do with it. So yeah, I think that's the unfairness inherent, eh?
Yeah. It's really just what is outside of your control. And if you're using a money that someone else can create at will, but you cannot, then you're always going to be subject to the whims of their decisions or just market cycles. So I think that's a big appeal to me of Bitcoin, is just being able to exit that whole problem.
Yeah.
Of yeah,
Yeah, totally. So that sort of leads to the monetary premium idea that I was talking about earlier, because this is not a concept in mainstream economics that people talk
yeah,
about very much. You know, certain things having value, you know, above utility. So perhaps just talk to that particular point, when people are talking about something having a monetary premium. What does that actually mean? And I guess, how does that relate to Bitcoin?
yeah. Well, if we go back to the Cantillon Effect example, when you kind of think of money being introduced into an economy, new units of money, and if you are someone trying to take advantage of the market, where would you inject that new money to get the most benefit for yourself? And what you would do, because money itself, fiat money, fails to hold its value over time by design, you're going to put it into things that preserve your value the best you can with the
Mm.
choices you have available to you. Housing has previously, and I used to live in Australia, now I live in Canada. So I say previously because for a lot of people, it's become just not a possibility. Housing was something that was available to the most number of people because the most number of people had access to mortgages. So many people, like you said, would use housing or real estate as their savings account, because if they had saved in fiat, housing just kept getting further and further away from them. So anything that continues to get further and further away from you relative to your monetary unit is likely accruing a monetary premium. And that is, people are using it as a store of value because the money itself is broken and not doing its job. So, you can look around. It could be fancy watches, bottles of wine. You look at the art world. So things that appreciate in value disproportionately when new units of money are introduced into an economy, usually that's a sign that they are attracting a monetary premium. And, the hope with Bitcoin is that Bitcoin is such a superior money because it is purely monetary premium. It doesn't really have, it's useful, but you kind of think of it as drinking the milkshake or sucking that monetary premium out of other assets. Just because Bitcoin's a preferable place to store value. Whether it's to do with its transferability, censorship resistance, maybe it's more liquid. So yeah, be careful what you save in is really the lesson.
Yeah. Yeah. And I don't know if this is something you mentioned in the book or something I read recently too, where once we've crossed over like a threshold where something is like widely recognized as being a better technology, there's no one's going backwards. So like, it wasn't as if like
Yeah.
we got the car and then some people were like, well, let's just, hop on horses sometimes. Like it just didn't happen that way. Like once we found something much
Yep.
better. So you wonder like at what point Bitcoin crosses that threshold, and starts materially draining capital from the $900 trillion global asset market, particularly when you think that there's a lot of negative yielding bonds, well, in real terms, I guess. You
Mhm.
think to yourself, I'm struggling to see the value proposition of holding government debt that's lower than that gives me a coupon rate lower than inflation rate. I mean, it's like a return free risk, as it were.
Yes.
I
Yeah.
think as Greg
Yeah.
Foster said, you know what I mean?
Well, you've hit the nail on the head in terms of the process that a lot of Bitcoin maximalists have gone through. And that is, it's not ideological, it's just a process of elimination. You know, they've gone through real estate, they've gone through bonds, they've looked at every other potential, I guess, investment or savings vehicle, whatever you want to call it, and they've looked at the opportunity cost. And Bitcoin has just been the best choice from an engineering perspective. So with the least risk.
Mm,
So yeah, it's unfortunate that people's time has to be spent doing that activity because in an ideal world or under a sound money standard, money just performs that task.
exactly.
Um,
Yeah, it's funny because I had a long chat with my uncle recently who was down, and he was saying, okay, maybe I'll get on board, Bitcoin, but why does it have to be such a big percentage? Do you know what I mean? Like, what's wrong with stocks? And even my father-in-law is like, I, you know, don't you think that the average person should just be putting the money in the S&P 500? And I think my response was along the lines of like, yeah, if you don't know what Bitcoin is, I don't think you should be investing much in it because you're going to have a heart attack when it goes through its
mm,
inevitable
mhm.
declines because it's
Yeah,
horrible. If you're not equipped to be able to handle the volatility, you'll be shaken out and you'll probably be scared to get back in the water. And that's why people are going study Bitcoin, not just buy
yeah,
Bitcoin, because it's not really that constructive in the bigger picture.
yes, yes,
When we're talking about that monetary premium being drained from all these other things that perhaps don't have as much utility, whose value proposition isn't as compelling, it's not as scarce, all those types of things. And let's imagine there's 900 trillion today, maybe it's more, maybe it's less. What do you like if you were to put a number on it? Like how big do you think Bitcoin's total addressable market could be? I mean, I
yeah.
throw out 100, Anil, because I just like the number, but I don't know if that's got any validity in
Yeah,
reality.
yeah. I don't have a clue, but what I do know, and a really helpful exercise to go through, is think about all the different pies out there. The line I like to use is Bitcoin takes many slices from many different pies. So you could just look at the products and services that are out there now. So think of the credit card fold, basically, earning rewards in Bitcoin. So that's a huge business in itself, credit card rewards points. At a certain point, any reasonable person will prefer to have Bitcoin than some loyalty point or air mile or whatever. At some point, it becomes too compelling not to do that. And you think about life insurance. Okay, do you want a life insurance policy that pays you a fixed fiat amount 40 years from now? Or do you want one that pays you a fixed Bitcoin amount 40 years from now? Which do you think is going to preserve your purchasing power better or, take care of your family better should you pass away? And there's just all these really interesting use cases that Bitcoin is only just starting to penetrate. And, you kind of think of the road or journey that Amazon has been on, and you look at, what, 15, 18 years down the road, AWS just becomes this massive beast in terms of the revenue it provides to Amazon company. So I just think many of the use cases or the like dominant use cases of Bitcoin are yet to be fully understood or even realized. So I think Bitcoin will just penetrate all these different markets in very interesting ways, and it'll be very difficult to predict what's kind of going to really pour fuel on the fire. So
That's why I wanted you to come on the show, Neil, because you're measured and sensible. Because I veer on the side of
yeah,
hyperbolic from time to time. Because yeah, I mean, I did not even think about the fold side of things. Like, who wants your petty airline miles? Do you know what I mean? And absolutely, I knew there was something with insurance and Bitcoin because I always thought like, I mean, even if these insurance funds decided to put like 0.5% or 1% of their assets into Bitcoin, what that could actually do to their ability to be able to, make payouts and whatever it might be in the future. I mean,
yeah,
there's just so many things, as you say, that are just unknown. Um, I often talk to people as well, like about look at all these intermediaries involved in making payments. Like, went to go watch the fights on the weekend, and because labor's so expensive, you got to scan a QR code, then you got to have some stupid app that just is another bloody middleman, and you got to like, oh,
yeah,
who are you? Oh, you want all my information? Okay, put in some nonsense name, and then they clip the ticket. Visa's clipping the ticket, like,
yeah.
and then the bank's involved. There's probably like 4 parties in this transaction. It's like, are you joking? This could easily be done via Lightning. We don't need this nonsense. So, yeah, I maybe I should actually be more measured. I think I'll take that out of this conversation. Hey,
No, but you need the balance, right? You need the
yeah,
balance.
yeah,
Uh,
absolutely. Maybe like if sort of Max Kaiser and you sort of had a baby, then that'd be the perfect Bitcoiner.
yeah.
Oh,
Uh,
okay. Sorry, I've detoured things a little bit.
yeah,
Okay. So one of the things, and this is me just jumping around a little bit because there was
yeah,
something
go
in the
for it.
book that I really enjoyed. One of the things I hear from people, and this was again on my travels recently, it's not backed by anything. Bitcoin's not backed by anything, as if fiat is. So, what is your response to that typical question when people ask you? Because it's pretty common.
Yeah, I gotta basically anytime someone asks me any question about Bitcoin, I think in my head, who am I going to channel right now?
Yeah.
Who am I drawing on? Because that's where I learned it from. And for Bitcoin, what is it backed by? I kind of just think of Parker Lewis because he wrote a great essay called "Bitcoin is not backed by anything." And I was fortunate to work editing a book that he actually just put out called Gradually Then Suddenly. If you haven't read it, if you're new to Bitcoin, I really recommend going and reading this book because it just takes down every main roadblock you might have in understanding Bitcoin. It does it in a beautiful way, very easy to understand, and just these arguments that you can't fault the logic. And when it comes to Bitcoin, what is it backed by? He often talks about, well, it's not backed by anything. It's just superior monetary technology. It just has these properties that are more inherently useful, and that's why people use it. It's like think of a hammer. It's like, no, what is a hammer backed by? And I know it's not money, but it's just a useful tool to serve a purpose or a problem that you might have. And so I think it's just people get caught up on that question of what is it backed by. But if that actually mattered, no one would be using it. No one would be holding it. They do it because it has superior monetary properties relative to all other choices.
Hmm.
That's all any money needs or survives on. So yeah, if someone's asking you that question, they don't understand money themselves. So you could
Yeah.
probably disregard most of what they say.
Yeah. No, that is true because you actually say like, well, actually, did you know that the money in your bank's not actually in your bank
Hmm,
and it's not actually yours? Because if you try to draw $10,000 or more in cash, they'll go, "Hey, what are you doing? Are you buying drugs or
yeah.
something?" Yeah, exactly.
Yeah, no, backing's an interesting concept. It's useful to understand in monetary history how we went from gold as money to paper as money. Like
Yeah.
clearly, you know, at one point paper was backed by gold or freely redeemable in gold. But anytime you have a piece of paper or some form of currency that is backed by an asset or a commodity, there's going to be counterparty risk in that, because you need to be sure that your, IOU or token is going to get what is backing that token. So yeah,
And it seems
you
to
don't
be
want.
quite obvious that I mean, maybe it's not, well, perhaps I'm going to misspeak here, but Bitcoin would be the best thing that governments could do to back their fiat currencies, because it's totally auditable. You know what I mean? You can go like, hey, we got 10,000 Bitcoin, have a squiz there. Perhaps you could have like real estate. Maybe they got like a real estate portfolio and you'd be like, yeah, have a look at the buildings. But it's not as if like the finances are very clear, in the sense that like it might just be sort of geared to the top, like maybe you only own like 10% equity in that property and it's like you got a horrific interest rates or something. So it strikes me that there's not many things the government can do to back their currency with anything that doesn't necessarily require trust. And then, they always
Yeah,
break that trust invariably. Yeah.
yeah, and that's the problem. Once Bitcoin existed, it doesn't matter what a government does, even with Bitcoin, no one's going to choose a currency backed by Bitcoin if they have access to Bitcoin itself. So yeah,
Yes.
I'm not sure if that's the strategy that'll be useful to governments. It might, if they're just hoping to take or continue to debase people's savings, because if I'm a government and I hold 10,000 Bitcoin and I issue currency that's backed by it, there's nothing to stop me from rug pulling. Yeah, like you said, trust in government is pretty low right now.
Yeah.
So I think the strategy that maybe seems to be working the best is, if you look at El Salvador, and it's just you look at the price of the government bonds
Mm.
issued by the El Salvadorian government versus other very maybe highly rated Western governments, and you have to ask, okay, what's the difference there? What strategies are they employing that make the El Salvadorian bonds far superior and lower risk to all our other options?
Yeah. 100%. Yeah. And there was no like apology by all the naysayers from the outset, when El Salvador embarked on their sort of, on their bonds program, there was a lot of like naysayers, and I just remember all the
Yeah,
headlines. And then there was a headline that came out at some point, oh, they're the best performing bonds. I think, was it in 2023 or 2024, something like that. And it's just like, no, 2022 rather, or 2023. And yeah, no, it seems pretty obvious. And yeah, that's actually a good point. Like, governments aren't necessarily going to back their currency with Bitcoin. And the reality is, it's not as if like they could easily just rug pull, as you say. They could just, the leaders could just have it in a 2 or 3 multi-sig and then bugger off to Dubai and never to be seen
yeah,
again. They can print a lot of money, and that's what they would do if they were South African politicians. But anyway, that's a separate
right.
matter. um, wanted to chat about a couple other concepts. A intransigent minority. This is something you talk about in the book and relates to how change occurs. So let me hand over to you on that one, because I love this concept.
Yeah, this was taken from the book The Sovereign Individual. So if you have a chance to read it, it's a heavy read, but well worth it in terms of predicting or providing a really helpful guide of how the future might play out, based on, it was written in the late 90s, based on how technology was developing. You could kind of understand what might happen and what might the incentives be in the future. And the intransigent minority kind of looks at it with any technology. There are usually, and you can probably just think of a few examples in your own life where a small group adopted that technology wholeheartedly and would be very unwilling to then either go backwards or look at other options. They found something that served a specific purpose for them perfectly, and they were not going to change, and that was all they were going to accept. Well, the same thing applies to money as well. As you probably know, once someone understands Bitcoin and has the ability to accept Bitcoin in payment or convert any fiat they receive into Bitcoin, they're not going to save in rubles or yen, or anything else. And this has this spreading effect, because some people will accept everything and some people will accept just one thing in everything. So the group that's maybe doesn't really have a preference, or is just happy with anything, that intransigent minority who are unwilling to change, or unwilling to accept fiat, they force their preference on the rest of the group slowly over time. yeah, I feel like we're genuinely seeing that play out now. So it's again, it's very inconspicuous.
Mm.
It's a slow process, but yeah, it's I think it's very clearly happening from my perspective.
An example that I've read about elsewhere or heard about elsewhere, and perhaps someone will correct me, but one example, and it's got nothing to do with money, is apparently all beef in the UK is halal because even if Muslims make up a relatively small proportion of the population as a whole, it's obviously really important to them. The rest of the population are perhaps indifferent to an extent, and so meat would be halal. And so, yeah, it's such an interesting concept, and it's really encouraging to know that it's never really like we need 51% of people and then we've got it. It's like
Mm-hmm.
maybe you
Yeah.
need 5% of people who just are going like, no, we will not yield.
Yep.
This is what we want. And that's how
Yeah.
change happens. That's probably how
Uh,
revolutions happened. Not that we're advocating violence, but this is an economic, peaceful revolution.
yes, and that's it. It just comes back to economics. It just sound business decisions. If the Coca-Cola company understands this concept, you can damn well bet that it's in their interest to do so.
Yeah.
Why wouldn't you serve the largest population if there's no friction or additional cost involved? So yeah, it's a very interesting thing to understand.
Next one, I love this one. This rings so true for those who have been around the block a little bit with Bitcoin. The Gell Man Amnesia effect. Talk to us about that one. Is it Gell Man or Gel Man?
I think it's Gell Man. So there's a physicist called Murray Gell Man.
Yes.
It's not actually. It was actually written by the author director Michael Crichton. He actually came up with this term,
Yeah.
and it I'll gloss over the actual story of how it came to be. But the the basic concept is anytime you read a story in the mainstream media, let's say you really understand, let's say rugby, and you read a story in the Guardian that is talking about rugby, and you can very clearly identify errors, basic errors, things that are just factually untrue that you know because you're an expert in rugby. Well, now you're going to look at everything else the Guardian has published with a different lens because you don't know what is and isn't true, especially in areas where you have no particular expertise. Let's say, I don't know, archery. So it's just a helpful tool for filtering out your information diet, especially with large publications where there are many different people writing for, say, under one banner. And, you see it all the time with Bitcoin because there's just been so much factually incorrect, negative slanted stories about Bitcoin. And it makes sense that that gets the clicks. You know, Bitcoin was the perfect villain for a very long time, but it also did us a great favor in being able to very quickly say, okay, no, I'm done with, Bloomberg, or I'm done with Fortune magazine.
Hmm.
And yeah, I know a lot of Bitcoiners now that just follow individual people, and that's how they get their news or long form research or whatever, because it kind of rests on the reputation of that individual. And if that relationship's
Yeah.
broken, okay, it's done. So yeah, it's just again, it's just helpful for tuning out the FUD, as you kind of mentioned earlier.
Yeah, that's brilliant. Yeah, it's absolutely the case. I'm sure anyone listening could actually, resonate with that. Even if, I mean, if it's not Bitcoin, it could be on anything. But once you've seen errors, committed by a particular publication, you start going, "Whoa, what else are they talking about? That's nonsense." So yeah,
Yeah,
that makes absolute sense. Anil, I could chat to you for a long time, but let's I know this is late in your world, so I've got one more question for you, and I try and get all my guests to touch on this topic,
yeah,
because I have this feeling that crypto is here to stay for a while, until such times a lot of that tech has migrated across to Bitcoin, which could take time. And in the interim, there's going to be all sorts of narratives, exciting, shiny stuff. And as we see this bull run happening, I've got originally I thought perhaps crypto wouldn't perform, but I'm actually losing a bit of hope in that regard. And I think that's going to be a whole new cohort of people. So if you're talking to ordinary people and just in terms of a mental model, how do you tend to distinguish it? Because I think the more ways that we can communicate the difference, not necessarily prescribing what people do with their money, then the better, you know. And then they can decide, invest in what the hell you want, really.
Yeah, yeah. Yeah, I don't know if there's a particular rule that's helpful for understanding that. Well, okay, firstly, let's talk about scams really quickly because you've seen a lot of high profile things blow up that were
Mm.
very clearly fraudulent. And in I want to say 2017, I gave this talk on scams, and it was actually at a crypto conference because at that time there weren't really many Bitcoin only conferences. So I gave this talk on scams, a bit tongue in cheek. I'm not sure if that audience completely understood. I was maybe directing some of that at them, but basically, okay. So there was this woman called Adele Spitzer, and she actually, at one point in time, was the richest woman in Bavaria. And she ran this scam. She basically set up her own bank and took deposits, promised interest, and she started paying out interest with new depositors. This was 50 years before Charles Ponzi.
Wow.
So she actually was the first person to pioneer the Ponzi scheme, although Charles Ponzi kind of gets all the credit and, his name is now forever tarnished. But then, what did we see in 08? Bernie Madoff. Okay, what did we see with Luna and FTX? It's just the same core narrative is always going to repeat because it like touches on those key human emotions of, greed, fear of missing out. And there's this book called The Seven Great Narratives, I think. And it kind of just breaks down how every major movie, TV show, novel kind of follows one of these seven different story structures. And scams are kind of one of those categories. And if you read this book and you kind of make that connection, it's like the rags to riches story.
Mm.
You start seeing it everywhere. And you realize it's just the same story playing out in different contexts with a new group of people being preyed upon. But the hope that it's ever going to go away is just gone. You just recognize that this is going to be around forever. All you can do is protect yourself, the ones you love, and if people are curious enough to ask, okay, be generous with your time. But yeah, unfortunately, it's going to be around for a long time. Getting back to your point.
Yeah. That's a great story, by the way, because yeah, when you look at movies and whatnot, like they always have these, it's like so predictable. And I actually think I must have a look at that book. But sorry, carry on now
Yeah,
on the crypto
yeah.
side. Yeah.
But no, you're right because I was watching. This is a long time ago. I remember I was watching The Lion King with someone and their son, and he's like, "Well, this is just a remake of Macbeth, right?" And I was just like, so again, it's just the same thing over and over. Okay, Bitcoin, not crypto. There's kind of this ladder, I guess, of understanding that will get you there, and you have to start at the base. You can't start halfway up the ladder. You have to take it step by step. And the very first step is, do you believe money is necessary in society? And the reason that's important is because some people don't. And then they're kind of going down the road of, well, we should live in a barter economy. Maybe communism is an interesting idea. And
Mm.
the way you take that first step is you look at the barter system and you look at someone trading apples for oranges, and then you start adding in more items. And you realize that once you have 6 different unique items in an economy, well, now you have 15 different pricing relationships. This is going to get very confusing very fast because it's an exponential equation. You have 500 items, or now you have, I think it's 125,000 different pricing relationships. Anyway, something crazy like that.
Mm.
So then you recognize, okay, we need some common thing in the medium, in the middle of all these transactions. We need money because now we can all specialize. It's very easy to conduct economic calculation. Okay, cool. You're on that first rung. Next, it's what is that thing in the middle going to be? Okay, what are we going to use as money? And then you're looking at what has money been over time? Why have we chosen those things? Was it the free market? Was it forced upon us by governments? Does money change over time? And I think most people will say, yes, clearly it has. Shells, gold, fiat, Bitcoin. Yeah, it evolves. Basically, people are looking for a better and better version over time. Okay, well, do we use multiple forms of money concurrently? Does that make sense? Does it make sense to have gold, silver, copper, tungsten at once? Well, maybe, but as a savings vehicle, what do you want to store your wealth in? And most people will say, well, okay, gold. That has proven to be harder money over time. And if you look at, say, even the nearest competitor, silver, and you look at the silver to gold ratio over time, well, silver's just gotten more and more diluted in terms of gold purchasing power. Okay, so now the next rung is, do we converge on one money? And that being just the hardest money of all available options. And if you can keep going down this process, you realize that it is Bitcoin and not something else, because you have to make a concentrated bet. There's only going to be one digital money. It doesn't make sense for us all to walk around with 100 different digital monies in our digital wallets, and we're paying different people in different currencies. And don't worry, AI will take care of all the foreign exchange. So, okay, we know we need money. We know money changes over time, and we know it converges to one. Well, okay, now you kind of have to go down that technical road of, okay, why is it Bitcoin? And what is helpful to arrive at that conclusion is just looking at the history of different peer-to-peer versions of digital cash. And you, again, you kind of go back through the different things that were tried in the past with BitGold, DigiCash, all these different technologies. This is way, I'm not talking other different cryptocurrencies if anyone's listening. These are like previous attempts at creating digital scarcity. And then you recognize that Bitcoin solved that age-old computer science problem of creating a digital scarce unit. And whatever managed to solve that problem was always going to become the singular digital money. Well, now you've just kind of cracked the code. You're not going to gamble your purchasing power with anything else, because you understand how incredibly, insanely fortunate you are to arrive at Bitcoin in your lifetime during its monetization period. Yeah, you've got to climb that ladder, and it gets more exciting with each step, but you have to start at the bottom.
That's brilliant. That's absolutely brilliant. Yeah. So you're kind of reeling them in step by step. So asking them questions. Yeah, that's fantastic, because it's kind of one of the things I'm trying to do here is help people. If I can just help a handful of people, if that's all I can do, just save in Bitcoin and stay away from all the other nonsense. That's fine. But again, I'm a free market guy. Do whatever you want with your money. But if you've done the work, the rational conclusion is that there's no second best, as Michael Saylor would say. Yeah, Anil, this has been absolutely superb, and really enjoyed our conversation. There's so many other things that I'd love to chat to you about, perhaps some other day. But yeah, really can't recommend this book enough, The Bitcoin Handbook. It's good for folks actually, who understand Bitcoin and will just sort of piece together new stuff that you hadn't thought of, but also really good for people who just want to kind of put their toes in and go, oh, there's so many different aspects to it, because there's you refer to all the heavy hitters, all the people that I think are highly credible, that will just get them well in their way. Brilliant. I know you're not much of a self promoter. So did you want to let the audience know where they can find you or anything like that?
Yeah. Head to my Twitter account. It's Anil said so. And I've got a link in my bio, and I have a ton of free resources. My book's even free in the digital version. Go and take those resources, especially if you are helping loved ones understand Bitcoin, or you're giving talks at your local meetup. Go and take those resources. I hope they'll be useful to you. They're very beginner friendly, easily digestible. I kind of keep everything as jargon free as I can. And other than that, I'm currently working on a book, a kind of compilation of a lot of Michael Saylor's wisdom, because I know you just brought him up then.
Nice.
So why not? Which will hopefully be out by the end of the year. And be at a few conferences this year. Otherwise, yeah, thanks for having me, Dale. This has been a blast, and hopefully we can meet in person one day over a beer.
Yep, I would love that. And maybe you'll come to Australia's Bitcoin Alive conference one day, because it's only getting bigger and better.
Oh,
So yeah.
yeah, it looks fantastic. Saw some of the footage from last year. Very
Yeah,
jealous I can't be there this year, but yeah, fingers crossed for 2025.
absolutely. All right. Well, thank you so much, and all the best. Cheers.